All right, let's talk Bitcoin. Because right now, at the end of 2025, the market is, well, it's confusing. The price is heading down, sure, but that's not even half the story. The real question is, are we looking at a healthy little dip before the next big run-up? Or is this the beginning of something, much worse? We're going to dig into the data and see what's really going on. So let's just get this out of the way. Negative 15%. That's roughly how much Bitcoin has dropped in the last month alone. I mean, after the killer year we've had, things have definitely lost some steam. We saw it pull back from over $90,000, and now it's kind of stuck below $86,000. And yeah, that's the big scary number that has everyone talking. And worry. Okay, so price is down, end of story, right? Well, not so fast. This is what makes the current market so fascinating. For every single bearish signal that's screaming sell, there's this incredibly strong bullish signal bubbling up right underneath. It's like we're caught in a massive deadlock. And figuring out why that's happening is the only way we're going to get a clue about where we go from here. All right, first up, let's dive into the bear case. You know, the argument that says there's trouble on the horizon. These are the signals that are really shaking up the market right now. Check out this number, $300 billion. That's how much Bitcoin long-term holders, yep, the original hodlers, have cashed out just in 2025. It's been called a silent exodus. And believe me, that much selling creates some serious pressure on the price. And it's not just that slow, steady selling either. We're seeing specific events that are really spooking people. For instance, one single whale just moved nearly $350 million worth of Bitcoin onto exchanges. That's usually not a good sign. It almost always means a big sale is coming. Add to that, we've got traders bracing for a potential $15 billion shakeout on December 19th. So what's the overall feeling? The pros are literally describing the market as tired and just having bad vibes. Not exactly confidence-inspiring, right? Then you look at the charts, and there's another problem. It feels like every time we try to rally, we smack our head on this invisible ceiling. Analysts are calling it a hidden supply wall, sitting right around $93,000. Basically, there are a ton of sellers waiting at that price, and with less money flowing into futures, there's just not enough gas in the tank to break through it. It's a huge technical roadblock holding everything down. So with all that going on, massive selling, bad vibes, a technical wall, the bear case looks pretty solid, doesn't it? It seems like it's all bad news. But hold on. This is where things get really interesting. Let's flip the script and look at the other story that's quietly unfolding. Okay, now for the bull case. Let's talk about the hidden strength. There are some incredibly powerful signs suggesting that this dip is just a temporary blip, and that underneath it all, the market is actually stronger than it's ever been. So think about it. If all these long-term holders are selling, who's doing all the buying? Well, it turns out it's the institutions, the big money. What we're actually witnessing is a massive wealth transfer, with coins moving from one group to a whole new, much bigger one. And we're not talking about a little bit of buying. This is huge. For the first time in 6 weeks, institutional demand, mostly coming from ETFs, is actually outpacing the amount of new Bitcoin being created. Let that sink in. They are buying up everything that's mined, and then some. This is a massive deal. It means the big players are now absorbing more than the total new supply. And that institutional conviction leads us to maybe the most powerful bullish indicator of them all, a number you probably haven't seen in the headlines. $1.125 trillion. What is that? That's Bitcoin's realized cap, and it just quietly hit a new all-time high. So, what on earth is a realized cap, and why does it matter so much? Okay, let me break this down for you, because it's super important. Your normal market cap, that just takes every coin and multiplies it by today's price. But the realized cap is smarter. It values every single Bitcoin at the price it was last bought or moved. So it's basically the total amount of money that's actually been invested into the network. And the fact that that number is at a record high while the price is dipping, wow, it tells you that holder conviction is rock solid and the network's true fundamental value is still climbing. And when you see fundamental strength like that, it's no wonder the big names in the industry are getting, well, pretty optimistic. Take CZ, the founder of Binance. He just came out with a massive prediction. He's calling for Bitcoin to hit somewhere between $120,000 and $150,000 by January 2026. That's just around the corner. So there you have it, two completely opposite stories. On one side, you have short-term sellers and bad vibes. On the other, you have this incredible underlying institutional strength. It's a real tug of war. And which side is going to win? Well, that might come down to a few things happening outside of the crypto world. So, what could push us one way or the other? Well, the headwinds are pretty clear. Stalled regulations are a big one, and so are all these fears about a macroeconomic recession. But then you have the tailwinds. We've got pro crypto politics gaining traction, some really cool integration with the AI sector, and of course, those ETF inflows just keep on coming. This is really the battlefield where the next big move is going to be decided. So, after all that, what does this actually mean for you? We've got this epic battle between the bears and the bulls. What's the bottom line here? Okay, let's just recap the dueling stories real quick. You've got the bear argument, people are taking profits, fear is in the air, and sentiment is just tired. That's pushing the price down. But then you have the bull argument. Institutions are buying up everything they can, and the network's fundamental health is at an all-time high. So where does that leave us? Stuck. The market is in a classic consolidation phase, caught right in the middle of these two giant forces. And listen, if you take away just one thing from all this, let it be this. What we're seeing right now is consolidation. It is not a confirmed collapse. Yeah, the price action looks ugly, but the underlying data tells a story of a market in a tense standoff. It's a period where coins are basically moving from nervous sellers to very confident long-term buyers. The price is just the rope in their tug of war. So that leaves us with the million-dollar question, doesn't it? As these two massive forces keep colliding, what happens next? Is Bitcoin just coiling a spring, building a solid base for its next monster rally? Or are these the first cracks we're seeing before a much, much bigger fall? The data shows we are truly at a crossroads, and whichever way we break from here, it's going to be a big one.